Hey there, guys, and welcome back to Alex Invests. The markets, as we can see, are pretty green today, but there is one stock that's pretty red today, and that's Plug Power, and that is the stock that I want to talk to you guys about today. They had an earnings report recently, and they just announced yesterday as well the offering of common shares, and that is the reason that the stock is down today. So I want to talk about that as well. And just a little bit about diversification. So let's get right into it here. All right, so for those of you who don't know who Plug Power is, they're basically the leader in the hydrogen fuel cell industry, and they offer a commercially viable market for fuel cell technology. They work with huge companies including Amazon, BMW, Walmart, and they basically offer fuel cell engines, fuel cell power, and smaller vehicles like for forklifts and stuff like that. They also have backup generators, and they have hydrogen fueling stations right now already. So they're in many different sort of markets already, all focusing on the fuel cell hydrogen industry. But it reminds me a lot of Tesla back in the day. You know, the Tesla was working in a lot of different sort of markets in the EV space or electric power space. Like they have solar panels, and then they have obviously the EV cars, which is their main one, and many other little markets. So you see that with Plug right now, how they're expanding into many different markets, and then they're probably going to pick their best one and sort of expand that out. Like they're already doing, like they're already the leader in the hydrogen fuel cell industry. So we see that already here, and that's why I think this company is going to grow massively. Now, I just wanted to mention a quick point about diversification as well, because I think diversification is so key to having a good portfolio. And especially if you're really heavy in a certain industry like I am, and I think a lot of people are quite heavy in the EV market right now, this is a great stock to diversify there because it is in the hydrogen fuel cell industry. And they're also advancing quite quickly, and they actually remind me quite a lot of the EV industry about a year ago when they were kind of just first starting to take off and gather their feet. I think the same sort of thing is going to happen with this hydrogen industry, and so it's a good way to diversify without sort of going too far outside of the stocks that you like to invest in or I like to invest in, which is those growth stocks, right? And those kind of new energy stocks that we see going massive into the future. So for diversification, I know a lot of YouTubers mention this, but I wanted to go through it a little bit differently because sure, diversification in general is a good thing. You want to diversify your stocks, but the problem is a lot of the time people don't mention the fact that when you get too diversified in a portfolio, then that eats into a lot of your profits, and you don't want to do that. So you can kind of think of it like a good charcuterie board. You know, you have a good amount of cheeses, a good amount of meats and stuff, but you don't have too many because then again, you only get one bite per each, but you also don't want to have too few as well because then you don't get enough of a sort of range of things that you want on your platter. So that's quite similar, like I said, to diversification. So you want to keep that in mind when you diversify. Don't diversify too heavily, but diversify enough. There is definitely that fine line. So anyways, I just wanted to mention that quickly. So let's get into the earnings report now. All right, guys, so I just wanted to pull up the chart to reconcile some of this data that we got from the earnings on November 9th. So let's just take a look at that for a second. Start right there. November 9th, earnings came out. They killed it, and boom, we see a huge rally on the stock all the way up to here. This we're going to talk about in a little bit. This is because of their share offering. But let's just go back to the earnings for a minute here. So the record third quarter gross billings of $126 million. They had their best quarter ever in their 22-year history as a company, and they reflected about 106% year-over-year growth. Now, let's just look at the EPS here for a second. So we can see quarter three, it was negative 0.09. They actually say on their actual earnings report, it was negative 0.11. So that's their GAAP. earnings, but then looking at their pro forma EPS from their earnings, it was actually only negative 0.04. So that's actually a much higher EPS than the GAAP. And the pro forma earnings basically tell you how much the company made from its usual or ordinary business activities over all of their activities. So we can see that the specific markets that Plug is now focusing in on, they're actually getting much better earnings from those ordinary business activities. And that is the number that we want to watch, because that is the number how they're going to grow in the future, by focusing in on those certain industries that they're actually the best at, or the certain markets that they're actually the best at in the hydrogen fuel cell industry. So this company is not yet profitable, and when they do become profitable, we're going to see another big jump in this company. Like I already mentioned, they're the leader in the hydrogen industry right now, and we can see them start to focus on certain markets in that industry, and that's why we see that pro forma EPS so much lower than the GAAP EPS, because they're starting to focus in on those certain markets that they are really good at, and they're going to grow really quickly from here, I'm telling you guys. But I just want to mention this run-up again, because there is another reason for this run-up, and that is because of the vaccine news that came out again on the 9th of November. And why would this make a stock like hydrogen, or hydrogen stocks in general, have been doing really well? So why are they rising up? Well, hydrogen is considered an alternative to oil. So the more expensive oil is, the more attractive these alternative fuel sources become, in like hydrogen, as one of an example. So as the prices of oil rise, the prices of hydrogen also rise, or the stocks of hydrogen will rise, because all of a sudden oil is becoming more expensive again. So this is a really good thing for hydrogen fuel cell companies, including Bloom as well, and Fuel Cell Energy. I'm invested in both of those, as well as Plug Power, obviously, because they're all going to be so big. So that is the other reason for this run-up. Now, let's just go ahead and talk about this turn down, which we saw in the markets today. So yesterday, November 16th, after the market had closed, Plug announced pricing of an upsized offering of 38 million shares of its common stock at a price to the public at $22.25 a share. So we can see that from a price of 25, we went next morning right down to $22.25, because that is where they offered those extra shares to the public at the price of $22.25. So what does this actually mean, and why does this drop happen? Well, when the company offers more public shares, they're basically doing this instead of getting more debt. So it's a way to finance some of their operations and get more money into their bank account, basically, as cash, which they can then use to expand the business. So it's not necessarily a bad thing. And for us as investors, it's actually a great time to buy into the stock. Because what happens is our shares that we own, unless you're not invested in the company yet, they get diluted. So the shares that I had actually got diluted a bit. And that's the reason we see this big drop to $22.25 instantly off that price, because of how much upward pressure there is on this stock. Actually, we see the stock start to rise. But in general, what happens is there's downward pressure on a stock after a company announces offering of common shares. So we did see that downward pressure, but now we're already seeing a come up again. This really, to me, is just a great time to buy this stock more heavily. I actually invested today already, right around this point right here. I got into the stock heavily because they're obviously going to go back up. They're going to be a massive company. And right now we're still at the very beginnings of not only this company, but this industry as a whole. Remember, I mentioned they're an industry leader and they're not yet profitable. So once that happens, and once this industry becomes a little more known and becomes sort of like the EV industry is now, we're going to see huge gains on this stock. like I said, I bought around here. Was I worried with this drop down to here? Not at all, because I knew it was going to come back up. And literally the second it hit about 22.40, it jumps right back up to above where I bought it already today, you know? And I think we're going to see an increase again tomorrow in the stock. I mean, we're down right now 8.6% for the day. I don't see that lasting. This is just a short-term drop, and it's a perfect time to buy into this stock. And you will be happy if you do. I'm happy I bought more. And to be honest, I'm thinking if this goes back down to around this point, I might even buy some more shares again, because I don't see it really hitting this price again after this public offering of common stock is over. So that's going to do it for the video today, guys. I hope you liked it. And if you did, please like and subscribe and leave a comment. Let me know how I'm doing. And other than that, I hope you guys have a fantastic day. And I'll see you guys tomorrow.